Hi stock investors, JJ here, welcome back. Well, Tom Lee, a perma bull analyst, is bearish on the market for the fairly short term. At least we'll see what he's got to say. Also, Nvidia stock is continuing to go down. Is it going to continue to crash? Other mega caps are going down. The whole market went down substantially today. Is it going to continue during this month or further? And is it a buy the dip moment? Let's see what Tom Lee has to say, and I will react to it. He's really got usually quite a lot to say.
Now with this call for the markets on the first trading day of September is Tom Lee, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with
quite a lot of them short term. I just don't think it's a good idea to predict the stock market. Warren Buffett says it's not possible, but he continues to do it. If nothing else, it's pretty entertaining, and he has made some correct calls. Let's see what he's got to say.
With positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting sort of in the middle of the month, but this week is the jobs report. I'm sure there's going to be a lot of focus on that.
Right. So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
We did. Let's just take a look at that. What happened in the markets here. So year to date, we've got here the S&P 500, the NASDAQ, and the Russell 2000, the indices here. And we can see year to date, look at that, the NASDAQ went up. And in July, we had that big pullback. People got scared. That's what they're talking about, the growth scare there. And just in that past day, as I speak, we were down 3% for the Russell. The NASDAQ went down 3.14, which is a big move for one day. And the S&P 500 went down over 2%. So that's what we're talking about here. So what is Tom Lee going to say? And while I'm at it, Nvidia stock here, look, these are the Mag 7, the big stocks here. Nvidia's still up 124% compared to these others. I mean, Tesla is down on the year to date, and just over the past 5 days here, look at that. We can see that, well, there's been the holiday there, the Labor Day weekend, but Tesla's down 1% and Nvidia down 13.61% now just in the past 5 days. If we go back a month, things are more positive. And just in this 1 day session here, Nvidia went down at 9.42%, so it is crashing. What's Tom Lee got to say about the overall market? Get some clues about what he's thinking here. Well, not clues, what he is actually thinking.
Yes, I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. Mm-hmm. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because, of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
Yep, so the rate cuts, that's keyed up now. It's queued up, the rate cut there. But if the economic data changes, they could pull back on that there. That's what he's saying there. The growth scare that we saw there in the market. But corrections are pretty normal, has to say, like 10% corrections in market. The market's had an incredibly good year. I mean, as we saw here, year to date, I mean, the benchmark S&P 500 is up 16.57% still year to date, which in any year in the stock market, if it ended the year like that, that would be a good year.
So where does that leave you in terms of what is seasonally? Andrew just alluded to it. September's not great, and we know. I mean, we always make lows in October, or we have many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right.
No,
when the
not.
market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
There you go, buy the dip. He said it, but he said 8 weeks. That's unusual for him to say that he thinks it's going to be a rough 8 weeks. Leading up to the US election, I think we probably can't wait till that's over. A lot of people, well, there's so much, isn't there, in the media about it. So he thinks it's going to be a buy the dip moment and down for 8 weeks. Here's some information that you might not be aware of. This was in the Wall Street Journal today. Americans are really, really bullish on stocks. Individuals are taking a peek at their 401ks and rejoicing because the market's been doing so well, which you could say is a good sign. You could take it as a bad sign, depending if you're a contrarian or not. This is another headline. Warren Buffett, at the same time as a lot of investors, most investors, you could say the crowd, Warren Buffett has been stockpiling cash. This article says, should I be worried? So Buffett, Berkshire Hathaway, has been stockpiling $272 billion in cash or cash equivalents. I think he uses bond or treasuries there, which have had a pretty good interest rate. So he's not, treasury bills. He's not too unhappy about having that. And Warren Buffett, Berkshire Hathaway, grew its cash pile as it sold more stock. So they've been a net seller. Buffett's been a net seller. We saw those big sales in Apple. So on the one hand, we've got a lot of investors. We could say the crowd is pretty bullish on the stock market, has been still. And Buffett is the opposite, happy to stack cash. But he is, having said that, he is very patient. He pretty much waited out, the dot-com bubble, which went on for years. So that doesn't mean he thinks the market's going to crash instantly or anything like that. Just something to be aware of, that Warren Buffett, perhaps the best investor of all time over the long run, over many decades, is stacking cash.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well.
Okay, Bitcoin, we've got to have a look at that too. By the way, if you're getting value out of this video so far, I'd appreciate it if you manage to smash that like button to help the algorithm just find this channel, help the channel along there with the algorithm. And here we go, Bitcoin here. Year to date, I mean, he said it hasn't been doing well, but at 30%, 30.71%, if you compare it to the SP 500, that's pretty good. But maybe he's talking just, short term. It's down nearly 5% in the past month, past 5 days, down a little bit. So that's what they mean. He's talking really short term. He does talk short term, not thinking really, or long term's a different matter. We're talking short term here. The next 8 weeks, in fact.
Two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election, but
because there'd be more production, bad
yes.
for price, which is
So Trump is pretty keen on fossil fuels, like to support that, even though he and Elon Musk are together with electric cars at the moment. It's a strange combination, strange things going on in election season. So let's look at the oil. We haven't looked at this before, really. I picked up a few like ETFs and stocks that relate directly to oil here. So year to date, it's up 8%, just over the past 5 days. It's down. Past month, it's just down a little bit, but that's kind of an indication of where oil is at. Let's get back to Tom Lee.
which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity. And the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably the market.
That's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds, no, this is a strong market.
How far down? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's it's been testing investors' patience. But I think, we should expect turbulence.
Okay, so he's basically saying there for the next 8 weeks, he thinks there's going to be a market correction, which is around 10%. He thinks 5 to 7, possibly 10% correction. So it's kind of in the normal correction, and he doesn't usually call these. He's definitely predicting that, but basically buy the dip, he's saying as well. It's a buy the dip moment on the correction on market turbulence.
And then the question, of course, is when the turbulence comes, is it a buy the dip always?
I think
or is there going to be and by the way,
yes.
buy the dip at
It always does.
when it goes down by 2 or 3%, or you really actually have to wait for a 5, 6, 7% pullback?
I think 1 or 2 is just almost like daily noise. This market has shown, pullbacks like that. So I think something like a 5% pullback is very likely, but I think we need.
And are you waiting for that?
Yeah, I think it. You know what? We'll find out this jobs report, because if it's too strong and investors worry, and so the stock market's down Friday, I would be buying that dip. But there's a chance that we get a good jobs report and the market's up. I hate to sound so binary, but I would just say at the bottom line is it's a strong market. So I don't think we've seen the top for 2024. It's just that the next 8 weeks are tougher.
Okay, so he doesn't think we've seen the top for 2024, which means he does think it's going up, being perma bull, which is more of his natural stance of perma bull, but he thinks there's market turbulence coming in September, which really isn't unusual. It does happen quite often, and if you look at graphs of September, it hasn't been a great month for stocks on average, but you can never tell. You can't predict these things. So how's your portfolio doing for the year, or indeed over the past years if you're not new to the market? Do you actually know what it is, including dividends and all that? Do you know this true performance? I use ShareSite, and I do have a special offer for my viewers, my community here for ShareSite here. If you go to this landing page, the link will be in the description. You can sign up for free and get pretty good features for free, or the special offer there for the premium plan. And what it's about, if you've got different brokers, if you've been doing it for a while, or you use different brokers, you can bring the trades in automatically, compiles your portfolio, even Bitcoin there, and you can bring in historical trades if you've been doing it for a while, so you can really see if it's important to you to see the true performance, not just guessing at it, and over time, which is, including dividends. You can see this video here, which tells you a bit about it in about a minute and a half. Again, I'll leave a link in the description for that if you want to check that out. And now on screen, I'm going to leave a link to a video that YouTube thinks that you should watch next. So go and see that now if you want to. And thanks to everybody for watching, and I'll see you in the next one.